Looks like we got a little head and shoulders building here on the 1 minute. We got a shoulder here, a head, another shoulder coming in, and you would say that something like, let's say something like this right here, we break below that neckline, come up, come down, break through that headline, that neckline, we might be able to find something here. While you're day trading and scanning your charts and looking at what everything's doing, it's being able to pinpoint everything you can find on a chart not only makes sense, but things that a lot of other traders are probably looking at, because there's so many different styles of trading and strategies. And a lot of people use head and shoulders and inverse head and shoulders, cup and handles and all that on a daily basis, and build strategies around them. Like they're waiting for the breakdown and already have orders placed, just like with any other setup or strategy. And so you got to think there's probably people out there waiting for this play, so you might see some kind of reaction if it breaks this neckline, even though it's the 1 minute. Of course, everything is better on a higher time frame. If you can find head and shoulders or inverse head and shoulders or anything on a higher time frame, cup and handle, if you find them on a higher time frame, they tend to play out better than, of course, intraday on a 1 minute. Even a 5 minute would play out better than on a 1 minute, but I've played them on the 1 minute. You can, I've seen them break necklines and end up down here real fast in 1 minute. So if you know much about, all other patterns to watch for, wedges and flags and everything else, then you can be not necessarily drawing them, but if you can eyeball them on your chart just by looking at it without putting the visual effects on there, then it's all things that you can be paying attention to, that there's so many other traders out there that are watching that, and then figure out how it works with whatever your plan is. For me, see, if we break the neckline, that's going to get us below the 50 EMA. And right now we need to break basically this area right here where these wicks are. We break that as well. That's 995. We need to break 994, because that's what we was looking for to get our harder push to the downside. And if we say we break this, if that neckline breaks and we take this low out, then you need to be thinking, if we take that out, that we're going to be aiming for this right here. Take this low out. If you take the short trade on a head and shoulders, instead, say you take the first reaction or the first break, those are the steps that I would be looking at. All right, we're going to break here. We're going to take this low out. If we take this low out strong with a big candle, not just a wick, then I'm going to be targeting this with my take profit first, if I have more than one, to start scaling out. And then if we take that out, I'm going to be thinking, all right, we take that out in this line, this horizontal line, I'm going to be thinking about this precision entry zone here. I'd be like, if we take this out right here, then I'm going take profit here, bottom of the box right here, this long wick somewhere, and that, just like that. Sooner or later, one of these confluences is going to break, and you're going to find momentum behind it. So we broke neckline, we broke that, found a little bit of momentum, looks like it's trying to come in. You need to be thinking about this area right here. We close right there in 3, 2, 1, close, and then bam. You're looking for a straight down move right here. Put in the sell signal on the 1 minute on that candle. And just like that, I mean, those are the steps that I process in my mind when I'm looking at the chart every day.